FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You are listening to the Financial Survival Network. It's Kerry, Lutz, and back from a quick jaunt up north to the old stomping grounds. But the world never rests, and neither does John Rubino. He's pumping out the articles, and for good reason. And John, what's doing on October 5th now?
Hey, Kerry. Well, it seems like every week now packs about 3 months worth of news into it. The most recent stuff includes the fact that the global financial markets kind of like the conclusion that the Fed can't raise interest rates now. The last few months' data in the U.S. has been weaker and weaker and weaker. So now people are starting to think that there's no way that we're able to raise interest rates, because that would destabilize a market that's already very unstable. You know, the dollar is too strong, and that's destabilizing emerging markets, and the global trade is starting to contract, and a lot of things are happening out there that imply recession rather than aggressive growth. And so if the Fed can't raise interest rates, that means easy money stays in place for a longer period. And the global financial markets are rocking right now. U.S. stocks are up triple digits on the Dow, and oil is up, and silver, which is, you know, monetary metal, but also an industrial commodity, is up strongly. So it appears that the financial markets are starting to respond the way they traditionally do to news of easy money from the Fed. For a while there, they weren't doing that. When the Fed announced that they would put off the rate hike for another month in September, the markets went down. They were kind of demanding higher interest rates. And now that appears not to be the case anymore, which is a more historically normal attitude for markets. Usually they get all excited when it seems like money is going to be easier than otherwise was expected. But this is probably not going to last, just because the global economy is much, much weaker than you normally see during good times. You know, the GDP now forecast from the Atlanta Fed, which has been pretty accurate the last few years, is back below 1% for the third quarter. In other words, we're back in a slowdown in the U.S. And manufacturing is in recession across the country. All the various regional Fed reports showing contraction. Services growth, which had been the bright spot for the U.S. economy, is slowing dramatically now. And U.S. trade is turning negative. So we're in the early stages of what looks like at least a slowdown and possibly a recession in the U.S. And the rest of the global economy, of course, is a total mess. You know, China is slowing down dramatically, and Europe has enough things going wrong that we could spend the entire show just talking about their problems. And so, they're in deflation and, recession for a lot of the Eurozone members. And it's not getting any better because of the Syrian refugees flooding the country, or flooding the region, and causing all kinds of turmoil. And emerging markets are a complete mess right now, even though they've stabilized a bit because the rest of the global financial system seems to be a little more optimistic, but they're still a mess. You know, the dollar is still too strong for these countries that have borrowed trillions of US dollars to pay back those loans. So until that's fixed, which is to say, until the dollar plunges, Brazil is a mess, and Argentina and Venezuela and Colombia and most of Southeast Asia. You know, these guys all have very serious financial problems that aren't going to be fixed if the world is stable going forward at today's currency levels. And meanwhile, the Middle East is absolutely in flames right now. You know, the most recent news is that Russia has decided to get off the sidelines and intervene in Syria to prop up its client state. The Bashir Assad regime is kind of an ally of Russia's, and it's been in serious trouble for the last year or so, and Russia's decided to prop them up on the pretense that you can't have stability in the Middle East unless you prop up the existing dictators, because if you allow the rebels to take over in any Middle Eastern country, you get ISIS. And that's an argument that has some validity, but now you've got Russia in Syria bombing groups that have been trained and backed by the US CIA. And you've got Iran sending a small army into Syria to engage ISIS on the ground. And you've got China sending its fighter jets into Syria to also bomb the rebels and ISIS and whoever else gets in their way. And then you've got the US stuck kind of in the middle of this, trying to protect the guys that Russia and Iran and China are fighting against. So you have the possibility here of some really seriously bad outcomes, one of which is American soldiers start fighting Russian soldiers in the Middle East. And that could easily spin out of control because you've got these two military powers who are the two nuclear powers in the world right now, going at it. And whichever side loses the initial skirmish is going to have to escalate to save face. And then you never know where it's going to go from there. Another scenario is that the U.S. allows itself to be pushed out of the Middle East because, what were we doing there in the first place? Yeah. Maybe we finally recognize that it's not necessarily in our interest to spend trillions of dollars trying to stabilize the flow of oil from a region that can't be stabilized. And that's going to pump out oil regardless. The world market is going to get Middle Eastern oil regardless of who controls it because there's nothing else to do with oil. If you just leave it sitting in the ground, you don't get the foreign exchange reserves, you don't get the hard money coming in that you need if you're Saudi Arabia or Iran or Russia. So it may not be in our interest to try to control the Middle East in the first place. And maybe we recognize that and just pull out. In which case, you get a major Middle Eastern war while all this is being sorted out. How would you like to be Saudi Arabia when Iran and its foreign allies take over the Middle East? And really, how would you like to be Israel? They've got to be terrified by what's going on right now because it almost doesn't matter who takes over in the Middle East if it's not the U.S., because no other configuration of forces there is favorable for the survival of Israel. And so it's hard to picture a happy outcome from the configuration that we see before us right now. Is the U.S. going to be allies with Iran and China and Russia in the Middle East, and all of us get together and form some kind of a ruling coalition of foreign powers with a couple of local client states? That would be hard to maintain, to put it mildly. And is the U.S. going to just reassert its power and force everybody else out? That would be incredibly messy for a while. So there's no real way to picture a happy outcome in the Middle East right now. And that's part of why oil is spiking today, because the petroleum markets and the commodity markets in general are starting to see the possibility that turmoil tightens supplies. Right now we've got a global glut of oil, some of which is being soaked up by China, but a lot of which is just going into stockpiles and filling up the reserves around the world. And if that is interrupted, if the flow of that oil is interrupted by turmoil in the Middle East, maybe that helps oil prices in the short run, but it hurts everything else.
Well, this is a no-lose for Putin because, if you're Putin and you destabilize the region even further, that just is going to help oil, right? And Russia's getting killed right now on these low oil prices. Putin might not care, but people in his country are not happy because Russia is a resource-based economy. There's no getting away from that. And, hey, it's just the way things work. And so but the Russian people supposedly are really not behind this war in Syria. He just called up, conscripted 150,000 troops, and they're against this war. They're against what's going on in the Ukraine, where thousands of Russian troops have gotten killed as well. And when your economy's bad and things aren't going good, you're not happy about little military escapades.
Yeah. But that's less of a problem for Putin than it is for the leader of a democracy. He can pretty much do what he wants. It's a dictatorship. And he's also fairly popular because he's standing up to the U.S. He's reasserting Russia's place in the world as a legitimate superpower. And in Russia, that plays very well with a big part of the population. So he can get away with this stuff. especially if the results are what they've been lately, where Russia wins. It's messy, but
Yeah.
Russia ends up more powerful than it started.
Yeah.
And as long as he's on that trajectory, he's a popular guy, and he can get away with this stuff. And if the current set of interventions lead to higher oil prices, like you said, that's kind of a win-win. He gains power in the Middle East, and he gains financial power at home because there's more hard currency coming in. There are more dollars flowing in to pay for Russian oil exports. So, right now, today, Russia is in the ascendancy.
Yeah.
And you never know how these things are going to play out and what the decisions are going to be. Because a lot of this is, it's not broad historical forces as much as it is guys under pressure sitting around conference tables and deciding what to do with incomplete information. And so you really don't know what the U.S. is going to do. We've been incredibly unpredictable and variable for a long time now. We've been blundering around the world doing things that 5 years before nobody would have thought conceivable. And we keep doing it. So who knows what we'll do this time? And Russia, of course, seems to have a plan, but it's not clear what the plan is exactly. and China is kind of a new figure in the world. They haven't been intervening overseas very aggressively, really since communist China or since the days of Mao.
Yeah.
And so, it's not clear what they're up to either, other than just asserting themselves and showing that they are a superpower of consequence in the world and knocking the U.S. down a peg. So that right there is a plan that is consistent and is clear and has a definable upside for these guys. Because if the U.S. loses influence around the world, then that also means the dollar loses influence around the world, and their currencies become more important in relative terms. And there's a lot of benefits to having a currency that is, if not the world's reserve currency, at least an actively used trading currency and a minor reserve currency, for instance. Those are good things for a country. And so if that's what they gain from all of this, then they've come out ahead.
Yeah.
At our expense.
And certainly no one could argue, John, that the U.S. is in decline. Everywhere you look, it's just the rest of the world is declining faster than the U.S. And China, they got big problems there with their economy. Maybe in the long run they're going to lead, but in the meantime, demand is going through the floor for their products. The car market down 1 million units, which is bad for, of course, the U.S.'s auto manufacturers. And you see that perhaps in the price of platinum going down and staying down under gold for months now, almost $200 an ounce less than gold, John. And what is that telling us? Because platinum is a noble metal, as they call it, so it's a precious metal, but just like palladium, it's used in these catalytic converters. That's the primary purpose of it. So what's going to be here is the question. China, the people had their financial crash, and it really is going to keep going down, it appears. They've showed that that pumping all this money in only goes so far. And then eventually you got to pay the piper.
Yeah, that is the thing. When we talk about decline or relative decline, we're talking about a world in which everybody has screwed up. We spent the last 30 or 40 years borrowing way too much money, and now we're paying the price for it. And, Japan, Europe, the U.S., China now, everybody's deeply in debt, and everybody is suffering because when you borrow too much money, life gets harder and harder. And so we're jockeying now for relative position in a declining world. And that's a really, really scary situation, because when the domestic economy declines, historically, governments start looking for external threats with which to distract their population. They don't want everybody focusing on the mistakes of the government and the pain that the government is causing them. So they say, well, these guys, our enemies, are trying to do this or that. We've got to stand up to them. And that galvanizes public opinion. It distracts attention from the mistakes of the government. And for a while, the government is once again popular and legitimate. And so you see the whole world trying to do stuff like that right now, voluntarily or not. Europe has the refugee crisis to distract its voters from the fiscal mismanagement of most European countries, and Russia, which is in a financial crisis because of low oil prices and other things, now has the Middle East, and China. That might be one reason why China is involved in the Middle East now, to distract its population from the fact that it borrowed way too much money, and now it's coal companies and construction companies are laying people off, and there are no other jobs for these people who have come into the cities from the farms and expect a middle-class life, and so the U.S. Is in basically that same position, but multiplied by the fact that our finances are just horrendous right now and getting worse, but they've been hidden by the fact that a lot of our problems are in things like unfunded liabilities or credit default swaps, things that don't show up on most balance sheets, and so most people don't know about them. But they're starting to bite. Look at Illinois right now; it's on the verge of bankruptcy. A major state, could be bankrupt at any time. And these big commodities companies like Glencore are imploding along with their massive derivatives books, the counterparties of which are probably big U.S. banks and hedge funds. These are time bombs waiting to blow up. And it's not clear to the average person that they even exist yet. But when they blow up, we'll all know about it. So the U.S. might find itself in need of a foreign enemy pretty soon. It's going to have a really convenient one in the Middle East, the ISIS axis. And, we could be fighting ISIS. We could be fighting Russia. And we could be fighting Saudi Arabia or allied with Saudi Arabia. Who knows now? We don't know whose side anybody's on. And there's a lot of enemies to pick from.
Yes, that's for sure. We got our enemy of the week. And, your enemy of the week, hey, there's no telling. So question is, what is the little person to do about it? What are you to do? How do you try to insulate yourself from what's going on here? Because, it's a dangerous world out there, John.
Yeah. Well, in crazy variable times, really all you can do is hunker down. I mean, if you're a derivatives trader or something like that, you've got a lot of ways to make money from volatility. But if you're the average person with a 401k and a savings account and a house and a job, those are your major assets, there aren't a lot of ways to exploit this kind of volatility. And so what you want to do is just protect yourself as best you can. And that means pay off debts. Don't be deeply in debt in a world that might be spinning out of control, where you don't know which direction interest rates are going to go. And the stock market crashed for a couple of months and now it's spiking. You can't know what any of this means or what's going to happen next. So pay off debt, skew your investment portfolio towards safety. Just be in, short-term bonds and really conservative stocks, things like that still won't do great in crazy times, but might not do as badly as emerging market growth stocks or junk bonds or things that are really crashing right now, and will probably crash as volatility spikes. And then try to become as indispensable at work as possible, because your big risk, if you're the average person, your big risk is unemployment. And we haven't talked about the amount of layoffs that have happened lately, Kerry.
And that great job number last Friday, which sent gold rocketing forward, right? It was up $25 an ounce, and silver. And maybe the fundamentals do matter, John. I mean,
they do. They matter from the point of view of the financial markets, but they matter even more for someone on Main Street, because what's happening now is good jobs are being lost. We're laying off manufacturing workers and hiring bartenders and waiters, and so the total number of jobs out there is the same or growing slightly, but the quality of the jobs is plunging. And so if you have a pretty decent job right now, the big risk in your life is that you get knocked out of your good job and don't have anything else available except, tending bar at the local bar or something like that, or being a waiter at TGI Fridays or something, and that's a huge change in your lifestyle.
And they're trying to automate those out as well because, look, I told the story. I went to Chili's. We placed our order on an iPad. The server brought it. And then when it was time to pay the check, we had the choice, and obviously they preferred that we just swipe our credit card, and then the thing even calculated the tip for the server. And pretty soon, the only thing missing from that automation standpoint is the robot that brings your food out to you.
Yeah. And so multiply that by all the restaurants in the world and all the retail stores in the world, and you get a massive loss of subsistence level jobs. So a lot of people are on this trajectory where 5 years ago or 10 years ago they had a pretty decent job, then they got knocked down to a crappy job, and now they're being knocked down to a subsistence level job, and that job in a few years is going to be automated away, and so you're stepping down rung after rung on the economic ladder, and there's no real solution in sight because the jobs you used to have, the things you used to be able to do, aren't needed anymore. And there's no real end in sight to this because even during the quote unquote recovery, the process has been accelerating, and there's no reason to think that once automation really gets going that it's going to get any better, unless you're robot manufacturer or something like that, which will also be automated away pretty soon when robots start making robots. It's not clear what happens to fix this. And so right now they're trying monetary stimulus. They're creating huge amounts of new currency in order to slow this process down, but it's not working. The process is accelerating. Mm-hmm. And so you see all these long wave theories out there and multiple cycle things like the fourth turning, for instance, where this is a stage that humanity has gone through before in broad outlines. And it usually coincides with political turmoil and geopolitical turmoil and big wars because of a lot of the stuff we just talked about. People don't really see hope anymore. And when you lose hope, as Gerald Celente says, you lose it.
Mm-hmm.
And
you lose everything.
Yeah. And so it does feel like we're heading back into one of those periods where a lot of people just feel like they don't have anything left to lose. And the instability that comes from that is reflected in crazier and crazier economic policies and geopolitical adventures that you would never think of trying in good times, but in bad times you need a distraction. So as the father of two draft age sons, this terrifies me, the stuff that's happening in the Middle East and the economic trends that are leading to more such crises that will inevitably lead to, historically will inevitably lead to some kind of a big war in which a lot of kids who don't deserve to be sucked into it get sucked into it. And, you see a whole generation of lives be changed by it.
Yeah.
And so, I hate the way these trends are unfolding and hope there's some way to derail them, and put us back on a sustainable path where we don't require big wars in order to keep the people in power who are in power. And I don't know what the solution is, but I think there's still some hope of a monetary reset, for instance, where we just say, all right, we've screwed up, we borrowed too much money, let's do a massive devaluation against gold and then go back to some form of stable money. We revalue gold to $10,000 an ounce, and then we peg the dollar to gold at that much lower exchange rate. And so everybody ends up paying more in the short run for stuff, but having sound money to work with going forward. There's still a chance that could happen. But it's going to require a crisis to get people to give up the power that they have, to get the people in charge to give up that power, because an unlimited printing press is the ultimate power for a government, to be able to create money out of thin air. Nobody who has that power, who's experienced it, will give it up voluntarily. Yeah. So there will have to be a crisis that presents them with a set of choices where that's the good one or the relatively good one.
It's like being a central banker. I mean, it's the greatest thing in the world. You get to screw with people's lives and never be called to account for it. Mm-hmm. And you're richly rewarded both in and out of office. And it's just the greatest thing in the world. I mean, who would...
Yeah, because you get to delude yourself into thinking that you're compassionate, right?
Yeah.
Because you look at needs out there and you think, oh, I'm going to help you. I'm going to create a lot of new money and give it to you, and it's going to save your life.
And we're protecting
you're going to thank me
from the market
because I'm the one who gave you the money.
And you're being protected from the viciousness of the market. Anyway, viciousness of time has caught up on us, and we got to wrap up for this week. But find John's work at dollarcollapse.com. And don't forget, pick up his book, The Money Bubble. It's becoming more and more relevant by the day. While you're at it, go over to financialsurvivalnetwork.com. We've probably got about the largest daily collection of relevant articles that you need to know what's going on at hundreds of different sources around the world. And sign up for the free newsletter. You'll also get hooked up with our webinars. We got one coming up that you're going to love, which is about how to pay off your mortgage. Speaking of John saying paying off your debt in 5 to 7 years without changing your lifestyle, without upping your income, all of that. I mean, it's a simple trick, but it's a little known trick, and something, if you've got a mortgage, you really want to take a close look at this, because in a low interest rate environment, all the money you pay out in interest is that you can save is effectively income. So, John, on that note, we will see you next week, and be well.
Thanks, Kerry. Talk to you next week.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.